14 days until the next FOMC meeting, and the probability for the cut on July 29th has fallen from the 44 down into the 42.9s. What this is a perception of is that again, we're almost flipped. You can see here 42.9 versus 42.4. This is very close to flipping back to the next rate cut being in September. So it got pushed from June to July to briefly September and then back to July. But it's very close to flipping to that September meeting. As we go into our 9:45 timeframe, we have final services PMI. And then at 10 o'clock, we have ISM services PMI. So these are very volatile news events here. Notice that the dollar correlations are turning negative here on the S&P and the NASDAQ. We're very close to that kind of magic negative 0.5 correlation where there's a very sensitive inverse correlation to the US dollar. And the question is what is the US dollar doing? What trend is it in? And right now it is continuing to defend this massive extension long level. As we were going into the morning yesterday, we had this room to pull back into our support. And that dollar weakness trade sent the indices screaming back up into their resistance levels again. What we're watching for here is to see if this dollar strength trade continues its trend up into the 183s up here. And if we're holding above the 98,634s, this dollar strength trade could continue to create weakness inside of the indices. When we're thinking about bank squeezed back up into resistance. It's still inside of its shorts. When we're thinking about the VIX is still defending last week Thursday's lows to highs. Now, as we went into our overnight time frame, there were these opposing measured moves, which you can see here on the VIX. And that's what created our rally on the indices up into the retest of our resistance levels that we had run into yesterday afternoon. You can see this on the ES. When you're looking at the ES chart, you can see that VIX resistance level create a rally right back up into the top of our range. Now, there are two unfilled gaps that we have here as we're going into our morning. There was an unfilled gap that we left unfilled from Monday's close. That was unfilled. Now we're looking at this from the perspective of yesterday's 4 o'clock close at the 68.26.25. What are the gap fill statistics for Wednesday? 76% probability over 180 days. 78% of them have filled over the last 90 days. Look at the half gap fills, 92, 83, 83. But if we're outside of the 20 handle in price, there's a coin flip. Now there is an edge for the day of the week, but we are at the moment outside of the 20 handle, which is only a 50% probability. If we fell into that below that 20 handle in the next 11 minutes, that would start to give us an edge back into the direction of the gap fill at 70, and below 10, it would be a 98% probability. Where is the 20 handle? You can see here, it's almost acting like a support. And the top of this range here has been the 30 handle. And then we've most recently been holding above the 20. And so it's almost a situation here where it was acting as resistance. And now as we're going into the 11 minutes here before the bell, it's actually acting as support. And this is, of course, showing us it's kind of a... This stream continues at eminiaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.